Well, the next question is question number 3. The sports shop is funded by what? The business you look up business. See, past. Like what? Investment book calls account for sports shop. The next question says, few would have maybe investment least 10 ways that investment recurring the same account. The next question says, few would is why slowly stop doing so. He is advised and how they can ensure that his stock is sold. Discuss the member. So let's go information. From with let's go for ends of the book. By the first what information is asked about this. One of my knowledge. Data scope of balance. Trading stock is also asset for balance or so this stuff let us compose balance. For the data compose on what when a what March 1 March right so next time just brother or March voila since 106 146 then the next comes so we start at who March 1 brother well down how much 500 and the next current is issue that one click issue that out 400 meg house the frame that customers what's in post of this happy data from folk account in code books sales to sales the now amount 400 now 600 so this amount sales will what how in the moment that the sales you have to just be so the short is you will wait and create a cost of sales account much post of sales cost of sales like common cost of sales so rather the same cost 100 markup of say 9 600 this being as profit from 6 so the cost of sales discover amount 106. The next question is item C. Trading stock package the form cash job 600 power rack scouts so we have to record this in the trading stock account. When stock is bought for cash, we debit trading stock with credit bank. So in the trading stock account, the details is dated 1, details is bank, and folio is CPJ. Amount paid that was paid is 600,000. Then the next transaction is for letter D. So the trade discount is not recorded anyway. in the business books because it is given on the counter. So we subtract 613,000, subtract what? 13,000 to discount. This give us 600,000. 600,000. So 600,000 is included in the trading stock. The next item is item D. Invoice issued to supplier for merchandise totaled 351,800 rands. Invoice issued to suppliers. So when you're issued by suppliers, when the business receive invoice, they are issued by supplier for what? For the goods that the business is bought. So this transaction is recorded in the trading stock because these are invoice for credit transaction, meaning that the business what's on credit the stock. So the account that must be debited is trading stock, and the account that must be credited is creditors control. So in the trading stock account, the detail is creditors control, and the folio is CJ amount, the amount that is appearing on the invoice. Amount that is appearing on the invoice. The next transaction is item E. Some debtors were not happy with merchandise supplied to them. 2% of debtors who were sold goods from credit during the month of March retained their stock. So when debtors retain stock, we recorded in the debtors allowances journal. So this is going to reduce what they were owing, meaning that the debtors control account is going to decrease. And because the debtors control is an asset, it decreases on the credit side. So how are we going to calculate this amount? They say 2% of the debtors. So 2% of the debtors who bought the goods, they bought for 409,600. So 2% of these the debtors returned the goods. So if they return the goods, how much is the amount for that returns? So we have to calculate. This is going to give us 8,192. So those are the debtors allowances. So the debtors allowances are reduced at the debtors control. So we say 2024, March 31. Sorry, yes, 31. The debtors allowances. DAJ for debtors allowances journal. The amount that we have just calculated, which represents the debtors allowance, 8,192. I add the same item defective stock that returned to suppliers in March amounted to 29,000. Defective ones, this stock that were their fault, they are damaged. So their business returned the goods that they bought to the supplier. So because they bought on credit, now when they return the goods to the supplier, we're coded in the creditors allowances journal. We have to, if they do not accompany those goods. This is going to reduce the trading stock. So to show this, we record in the trading stock account. How are we going to show this? We say creditors control. Because the stock is decreased, we credit trading stock and we debit creditors control. So in the trading stock, say creditors control. Creditors control. Portfolio is CAJ. CAJ represents creditors allowances journal. The amount of the goods that were returned was 29,000. Next is G. The cost price of cash sales in March was 418,000. Cash sale. Cost price of cash sales. So where do we record the cash sales? We record it in the cash receipt journal. So this transaction is not going to be recorded in the debtors allowances. However, it affects the trading stock account because every time the stock is sold, we credit trading stock. So with cost of sales, folio C RNJ, amount 400.
and 18,000.
Then the next transaction is for letter H. So during the month of March, it was divided over 5% of the opening balance. The opening balance of the data's control is 156,000. And from these customers who are owing 156,000, they say 5% of them are not going to pay. They fail to pay. So we have to write off as bad debts. This transaction is recorded in the journal. And bad debts reduce the data's control, meaning the NC expense with debit bad debts credit data's control. So to show this, the debt is already there. Now we have to indicate general credits. General credits, or saying standing account. Folio is the general. So to calculate this, we say 5% of 156,000, which is the balance on the first day. So if we do the calculation using your calculator, you're going to get 7,800. So it's 7,800. Then the next transaction is letter I, receipts from debtors for March, 396 rands, 96,000 rands after allowing a 1% discount. So what are they saying here? They're saying this amount they already reduced. They already to remove the discount held for early settlement. So how much was the amount that the debtors paid before being reduced with 1%? So we take this amount as 99% because they already reduced a 1% discount. So how much was the amount that the debtors paid? So to calculate this, we're going to say being that amount before deduction represents 100%, and 99% is the amount that we are given, which is 396,000. So if we do the calculation, we are going to get 400,000 as the amount that was received from customers. So here the detail we say bank and discount allowed. The journal that we record this is KFC journal. Then the total amount, including discount, is 400,000. So the next question is item J. Certain debtors will charge interest of 5,200 due to late payments. So when debtors are charged interest on late payment, this is going to increase what they are owing. Because it increases what they are owing, we are going to record it in the debtors control account, increasing, meaning that it will be on the debit side of the debtors control. So the interest increase what the customers owe to their business. So the details is a journal, a debits, or we can say sundry accounts. Sundry accounts. A folio is general. This transaction is recorded in the general. How much? 5,200. Then the next item is K. The owner few wrote they made donations worth 50,000 rands for the month. 4,000 was cash and 11,000 rands was trading stock. So cash affect the bank account. Then 11,000 for trading stock, it affects the trading stock account. So when the business made a donation, trading stock decrease, using stock, trading stock decrease. So we go to the credit side of the trading stock, then you see donations. Folio is a general. Amount is 11,000 rands. So let's go back to item E. Item E says some debtors were not happy with merchandise supplied to them. These are customers who put on credit. So 2% of the debtors returned the goods. So when the business they receive those goods, they're going to put the stock back to their trading stock, meaning that we have to calculate the cost of those goods which were retained. We already calculated the debtors control. The debtors allowances is 8,182. So that's the total. So this amount includes a cost of sales or cost price of those goods. Because these goods were returned to the business, we take them back, we increase our trading stock. So to show this, we have to record them in the trading stock account. We are going to say cost of sales. Cost of sales. Then we calculate the cost of sales of those goods, which is going to give us by suppliers. This the debtors allowance. So cost is 100%. These goods were returned at the selling price of how much of 8,192. So the cost of sales for these goods is 5,120. So we say cost of sales folio it is DAJ amount 5,120. Now the next step is to balance these accounts. When you're balancing, you're making the two sides equal. The smaller side always carry the difference. So if we add these amounts, call the debit side of the debtors control. And when you add this amount, you can see that the bigger side is the debit side. So the debit side will provide the total for both sides. If we add the total for the debit side is 507,800. So this becomes the total for both sides. Meaning that the debit side carry the balance. What is the balance carried down? Then you see this amount subtracts the total for this amount. Or just subtract straight 507,800 subtract. Then you get the amount which is 154,808. So if we add this amount, it must give you the total for which is the same as the total for the debit side, which is 570,800. To bring down the balance to the opposite side. Now it's 2024. Every one balance they brought down. Bring down the balance 154,808. Then the next account, we have to balance again. And if we add the debit side, you can see that it's bigger than the credit side. So the total cost is the bigger side. The total cost the bigger side, and the smaller side is going to carry the difference. Which this one is the smaller side, which is the credit side. And the bigger side total is 1,409,920. Subtract all these amounts, you get 776,920. Now, if you add all these amounts, they must give you the same amount as the total for the debit, which is 1,409,920. So bring down the balance to the opposite side. New month, April 1, a balance brought down amount 776,920.